Yeah, I think if that's your first, if that's like the first live account that you've opened up, Mitch, I think other people are like, yeah, 20, what is it? Did you got 23% in one day? The question everyone's gonna have, because people are haters, that's just life, is what'd you risk, bro? So that'll be your first. Sorry, I'm trying to fix my screen here. Hold on. That's gonna be your first question. Would you risk? Let's see. Window, hit it, quit it. There we go. There's the charts, baby. Yeah, would you risk, bro? On here talking about you got 23% in a day, bro. I get that in a year. You're saying you got that with this did you use your strategy? That'd be your second question. Did you use your strategy, bro? Because it's really important that you use your strategy. I don't know, man. If you didn't use your strategy, I don't know, man. I don't know if I believe you, first of all. Second of all, if you didn't use your strategy, what if you risked 100% of your account to get that 23%? It's like, well, what was your, then it's like, okay, well, how much money were you trading with, bro? um, no, I'm on a live stream right now. So when I'm done trading, I'll get back to you. That's how I treat them right there. Boom. What'd you risk, Mitch? What did you risk, bro? That's the question, bro. Mitchy Mitch. Can't really see the chat. Hold on. I'm gonna like put this chat very clear in here. Let's see. There we go. There we go. Yeah. Get the chat going right there. Get the chat going right there. That is a weird looking chat. Hold on. Let's see. Can't really even see it. Let's see. I still can't see it. I messed it up. Hold on. That's better. How do I live without Mitch? How do I live without Mitch? All right, there we go. Hold on. I'm figuring it out. I'm trying to put the chat up on the boob tube. The boob dog, the boob. Yo, so last night market was literally moving sideways the entire night. I think you guys saw that, no? Man, I can't read that. If anyone else can read that, that's fine, but I don't know if it really matters, to be honest with you. Yeah, the market was totally sideways last night. It was very sort of expected though, because obviously today's big news. So FOMC day, everyone's gonna wonder. Hold on, okay, figure this out. I'm gonna figure it out. All right, I'm gonna just leave that. Leave that over here. Sure, why not? All right. 11:28. You're up. Okay, so wait, what'd you risk, Mitch? You had your first live account yesterday. You opened it up. What'd you have? You're up Dakota up 14% since Monday. Mitch, what are you up? Let's see, 23%. Nice, dude. So you're at 11:28 in your live account. That's pretty good, man. That's what's up. He said risk is the strategy. You're damn right, especially when you're talking to aggressive Mitch. Come on, man. When your name is aggressive Mitch, you kind of know like risk is the strategy, dog. You know what I'm saying? Don't second guess me. My name is Mitch, doggy. Let's go. I told you, Mitch, when you first joined, I told you. I said what? I said, yeah, bro, I think you're going to do pretty well here because you take action. Like there's so many people who just like don't take any action. You know what I mean? Half of the battle is like taking action. The people who that I've seen, the people that I've seen who, you know, crush it, they take action. They take action. To some degree, they take action. And it's usually not perfect, so I call it imperfect action, you know? Yeah, man. But that's sick. I'm really happy that that panned out for you and that you're up like that. That's awesome. Um yeah, really cool stuff. And you know what's great? It's like that was day 1, right? Literally day 1. You know what I'm saying? You know, so you just got to think of it like, okay, if that's day 1, what is day 2 gonna bring? I would honestly just look at day 1 and I would say awesome, and then I would go into day 2 today being FOMC, and I would probably be a little bit careful today. Again, I don't know what your drawdown was. I don't know what anyone's drawdown is. I don't really ask, right? But if I was going into day 2 and my first day was a big win, I mean, that's like enough for a month. I know that's not the kind of money you want to make. That's the problem, right? Is that like the money isn't there. So not what you want to, you don't want to make $100 a month or whatever it is. You want to make $10,000 a month, you know? That's the issue, is that people get infatuated with that, right? And then they think that they got to make that. But like, according to your balance, like if you look at your balance, according to your balance, you're making like incredible money percentage wise, right? According to your balance. So you got to keep that in mind. It's just healthy to keep it in mind, dog. That's all. All right. Let's see. I don't really have, let me see, music. Put the music on, man. I got my music going, but let's see. I'm gonna hit the charts in 2 seconds. Today is taking me a little bit longer. Honestly, I'm not sure if I'm even gonna take a trade in the morning because we have FOMC today. So the plan is to kind of check out where we're at right now, but then most likely come back on later. Let me just check something real quick. Let me see. Okay, none of that worked. Never mind. All right. Try this. All right. Well, didn't work either. All right. Well, forget it. I'm just doing this one. Okay. You had a drawdown. You had some drawdown, about $90 at one point, but it swung in my favor. I don't know what $90 is percentage wise, right? So, but you know, I think the big thing is like if you're opening up a live account, it's your first live account, you're up 23% in one day. You just have to know that you're probably risking a lot, right? So that's your strategy. Duh. I mean, obviously, and people can hate on it all they want, but if you're trying to double your money real quick, as long as you stick with something, who cares, man? Haters gonna hate, dog. Yeah, haters are gonna hate, man. As long as you knew, okay, if this reaches X amount, maybe you preserve your cap, maybe not. Maybe it's go hard or go home. I'm okay with that. Look, man, if I put $1,000 in, and that's $1,000 I can lose, and I have an edge here, but I don't have an edge at a casino, I would much rather risk that here. You know what I'm saying? I'd much rather play the odds right here where I'm a little bit more in control, right? So, yeah, man. All right, we got 7 minutes. Let's say we break this down real quick and go top-down analysis real fast, tell you exactly what I'm looking for. And by the way, I just want to be very clear. These are my opinions. There are a lot of different styles of traders out there. And it's not who's right and who's wrong. It's a community, right? One of the things that I will tell you guys, what I noticed is like, retail typically fight against each other. Not everybody, but the big guys, they're calling each other to bail each other out. Hey man, I'm upside down in this thing. Can you buy this at a discount? This is the kind of thing that, you got institutions working together as a team. So the point of us being in this community is that we work as a team. It doesn't matter whether you like my trading style or you believe in the one strategy for life. There's many strategies to get profitable, many. But if you don't have a solid entry model, you're really going to be lost. Like that's just the bottom line. You're going to be lost. So it's all about finding finding a balance, finding something that gives you gives you direction. More than anything, just gives you direction, man. Because once you have direction, you'll be able to navigate much better. You'll be able to at least see the charts in a way that you didn't see before. Meaning, before maybe you were guessing, before maybe you're using your emotions, before maybe you have, maybe some bad habits that we all kind of start out with, right? Maybe you revenge trade, maybe you over leverage, maybe you don't know where to put your stop loss or your take profit. Maybe you don't understand liquidity levels, or you don't think it's real, or you don't think it matters. And that's just never been a part of your trading strategy. That's fine too, man. That's fine. But I would just say learning new things is always going to put you in the power seat. I've always in my life, just for me anyways, and my mentors, it's always been like, hey, don't turn a blind eye to things you don't understand. Maybe look into it a little bit and just see if there's something there. If there's not anything there and you put some time and energy and effort in, then dip, That's kind of the way I see learning and in the markets. I think that we just need to, Mitch, knowledge is power, bro. Exactly. And the thing about it is knowledge is power if you use it, right? There's a lot of people who have, they learn things, but then they never use it. That's why you were successful in this, in the live group, right? You came in, I told you day one, bro. I said, okay, this guy is very aggressive, aggressive Mitch. And like you turned out. So anyways, this is my analysis and how I like to break down the charts when I get going. So I'm going to start with the daily. Nothing's really changed with the daily. We're still actually in this uptrend. And let me just point out the touch points. We have our low of the market down here, very obvious low. Now, the question you always ask yourself to understand structure is what created that swing point? Okay, so this point where the market swings is what we consider. And there needs to be at least 3 candles. So there's 1, 2, 3, and there's more than 3. So we got a swing point. Great. That's a 3 candle swing rule. So that's what I live by. We have our high, we have our low. What created that is this high. We have 3 candles, right? So that is a swing. So market structure break was here. We're in an upward direction on the daily time frame. So high time frame is up. We can then move forward and say from that new higher high, we have a 3 candle pullback. We didn't have any 3 candles up until where? Until the swing point. Very simple, right? So higher low. And now we know that the structure needs to be broken here in order for our daily time frame to be what we call a breakup structure, not a change of character. The market isn't shifting. It would just simply be breaking the previous high to go higher. So now that we're in a high time frame uptrend on a daily, what should we anticipate on a daily chart? Well, we should anticipate, forget about PD arrays, forget about what you think you know about order zones, breaker blocks, forget what you think you know about support and resistance, right? We should expect this. This is what you should expect. Now, why is that? Because that's market structure, period. It's the basis and fundamentals of what every single trader around the world, institution or not, is taught and should know. And if you don't know it, guess what? Now's your time to learn. No better time than now, man. And the faster you learn market structure, the more you'll understand what the hell the market is saying, because it does matter. So to me, again, my opinions, everyone has their own way of trading. You may not even look at structure. Maybe you simply go off of MAs, right? Which I think are lagging. Indicators lag. So that's why I don't trade with indicators. So, but anyway, again, my opinion. So let's move forward. Now I like to go down, and on this daily time frame, I understand the structure is up. I'm going to mark my liquidity targets. This is previous daily high. So we can see previous day high and previous daily low. These are what's closest to price right now. So that's why I'm marking those. I also have previous daily low down here. I also have a wick up here and some other wicks. I'm not going to mark those right now. They're not relative to price right now. I'm going down on my 4 hour. And so I go from a daily to a 4, and I didn't go to the weekly because we don't have a lot of time. So I'm going to make this really fast. So there are the liquidity levels, okay? Previous daily high, and I could mark these out. I have all these, you know, previous daily low, right, on this 4 hour, and previous daily high right here. I just have PDH, PDL, make it simple, right? This is what matters right there for right now, okay? And then I have another previous daily low down here, so I can mark this out, PDL, right? Market's about to open, so we literally have like 1 minute. That's fine. I'm not going to make any sudden moves off a market open anyways, guys. Okay, so market is open now. You can see the volume injected. New new 1 hour 30-minute candle is opened up. You see we opened up high. We opened with the top wick. Didn't quite take the highs of today. And now pushing down. If we want to see the sessions, we open up our session range on a 30. You could do it on a 1 hour, on a 30, whatever. And look at the session liquidity. So this is daily liquidity. This daily liquidity is somewhat in these zones. I consider these zones, okay? These wicks are not a lot of, again, the way I do it. And you guys see me trade every day. I am a profitable trader, thank God, because I struggled for 4 years not being profitable. Literally show you guys my trades every single day in here, man. Okay, screen share is off and sound. That is amazing. Thank you guys. That is amazing. The fact that you guys are still in here listening to me, you know what it is? Because I have the share on YouTube, so I see it there, and I'm thinking everything's fine. Sorry, guys. Hey, it was only like, what, 5 minutes? All right, so you guys, I kind of was walking you through it anyways, so you're probably doing it on your charts or just understanding a little bit. Anyways, here's where we're at. My apologies. Thank you, Dakota, for texting me. I would have kept going, bro. I would have probably been 20 minutes down the rabbit hole. Appreciate you, dog. Dang. All right, you guys all right? I'm going to turn the sound on too, soundboard for you guys on. All right, I think the soundboard's on now. Thanks, guys. Okay, turn my video on too. Why not? There we go. Thanks, guys. Yeah. Woo. All right, we got it. Thanks. Appreciate that. Appreciate it. Thanks. Yeah, epic fail, huh? No, no worries. Nothing happened, so we're lucky there. But anyways, like when we talk about liquidity, you can mark these wicks as targets. That's just kind of like what I like to do, right? But I'm not also immune to the fact that if I'm looking at the charts, I'm looking to see if these liquidity targets are taken. I like to put them at the wicks because this is where I consider the majority of the liquidity to be. But make no doubt about it, in my opinion and what I believe is that this is a zone. Price can stop anywhere in here. This is why a lot of people will have like a liquidity target, like previous daily high, previous daily low. They learn this from, who knows, ICT, SMC, whatever. And then what happens? Price doesn't quite get to that target, right? It turns right before, and you miss the move because you don't understand that that's a zone. You don't know where the liquidity pool's at. So once I mark this high time frame liquidity, I'm waiting for price to enter those liquidity zones before I make a move. I also have session liquidity on the chart that I need to be aware of. And the reason why is because these are interesting areas on the chart. So I'm going to mark, this is London's low. I can go in here and mark the London sell side liquidity level. And essentially what we're waiting for, right? What are we waiting for? Well, the reason why, if you have an entry model, The reason why you need to be patient is because if it in fact has an edge, you need to wait for it to set up, right? Making moves before the setup doesn't really make too much sense. Now you can speculate all you want. Again, I have really strong opinions in trading. I've been doing it 7 years, so don't take any offense to anything I'm saying here, right? But I think anyone who thinks that they know what the market is going to do is very foolish. You don't know what the market's going to do. You're going to take your best guess, just like everybody. And the way I like to take my best guess is first, we went to the daily. We discovered that we're in an uptrend. So I get that. Now I go to the 4 hour. What trend are we in? We're in an uptrend. How do I know? Well, this is a 3 candle pullback right down here, right? And so here is I go from the candle bodies. Some people some people do this. They go from the wick. Are they wrong? Am I right? It's the reason I go from the candle body is there's only one reason, and I'll explain it. Is because the last opposing candle to the swing, which was right here, this black candle, which is green, whatever. This is now, and I'm going from the bodies, is what was the order block. Okay, so if I didn't know what was going to happen, let's say right in here, right? Let's say I bring price back right to here. A lot of traders would see this move and they would be selling at what? Well, they would see this as resistance, no? This is a resistance level. Support, resistance, traders love this. Now, breakout traders would be waiting for the breakout, and reversal traders would be waiting for a confirmation. And I wait for a confirmation to go to reverse because price is going up, right? And so technically, from this perspective, what should we be expecting? This is a downtrend, right? Price broke structure here. We have down. There's your lower high. There's your lower low. And we would expect, okay, this is a very deep pullback, but hey, this is an order block, right? This should hold price. Should hold price, and then we should see lower prices. This is the move that was expected here, 100%. I know it was from most traders. Anyways, so here is an order block. When that order block gets broken like this, what do you have? You have now, this becomes it's not an order block anymore, right? And we're on a 4 hour time frame, so I'm going to mark it. It's a 4 hour breaker block. That's what a breaker block is right there. You just learned if you don't know. Cool stuff, right? The reason I like going from the bodies is because the order block is from the body. Right? So if I'm going to use it as a breaker block now, plus this has a fair value gap here. So it shows a lot of volume, a lot of inefficiency. And when you see volume like this heading in, when you see this, look at this, use your eyes. When you see this kind of range, this volume range, right? 240 points into an order block, you maybe need to think to yourself, wow, Mike told me that when price breaks levels, okay, like this, like an order block level, during specific times, in this case, it would be, obviously, look at the time. We can go here and look down at the bottom, 10 a.m., right? So this is during the right time. It's a New York session still. So time is more important than price because it's these times where price actually moves. So if you're not creating a plan that correlates with the right times to trade, you're really doing yourself a disservice. And this is something that, I call it ICT, sure, whatever. I don't care who you call it, but it's taught. It's been taught. And, so this is something you need to look for. If you see a lot of volume, you should probably be very careful shorting right here, just going in. So what is your confirmation, right? And we can get into that, but this is a breakout. So what happens is price breaks out, and that's your change of structure on this 4 hour time frame. Now, do we have any 3 candle pullback? Look on the chart. Where's the 3 candle pullback, right? You see it right here, right? 3 candles, it's 3 candle pullback. So that is your higher low. And that's what I would consider my higher low right here. So if I were to look at this and say, and I'll show you something in a second that's actually pretty funny. Actually, I don't know if I can show it, but I was on X yesterday, and I was in like a live stream session with some guys, and we talked about this area, and we talked about, I'm going to show you something in just a second, but so we have this huge gap here. Obviously, everyone's looking at this. So we're in an uptrend. The market structure break is not until down here at the candle body right here, right? So if price closes a candle body below this structure, then on a 4-hour, we're headed down. On a daily, we're headed up. Well, what do we do, Mike? Well, that depends. What's your time frame and where's your liquidity? Because there's different PD arrays and different, we'll call it structures based on your time frame. If you show me a different time frame, I'll show you how you're wrong or right. That's kind of the joke in trading, right? If you're wrong on that time frame, go to a time frame where you're right. So it's like, trading becomes like an argument for a lot of people because they have strong beliefs on like a particular setup. And it's like, dude, it doesn't matter your setup. It matters what you do after you're in a trade. All right. And so I'm going to get into this just a little bit more. We have our 4-hour London session down here. So we have our sessions, we have our 4-hour liquidity levels, kind of marked our previous daily high and low. We also know where structure is at. This is where structure is at. So I'll type structure here. Structure, right? On the 4-hour. All right, just so we have that clear. So price is still in an uptrend, very, very clear uptrend, right? Let's go down to a 1-hour. Okay, what's it in? What's price in? Let's follow it. Okay, guys, ready? Here we go. So we have our high. This is the high of the markets. Yeah. What created the high? So that's always the question that you want to ask. It's the easiest question in the world. It'll help you when you're looking at highs, or, in this case, that's what we have to look at, the high, right? What created that high in the market? And you look back and you go, well, are there 3 candles pulling back right here? Yes or no? Yeah, answer it yes or no. Let's go. All right. The answer is yes, and obviously. So that right there, it created this high. So that is your structural, that's where you're going to mark from the candle bodies where I like to do it. So I'm going to do that. And you have what? What is this? Is this a break of structure? A continuation would be a break of structure, continuing. When the market switches direction, it's a change of character. So the difference there is that a change of character is considered a little bit more relevant because it's a market structure shift, right? It's a shift in the entire market, and it is a sentiment thing too. It could be a sentiment thing. And you notice that we were pretty bullish because the Fed's going to reduce rates, right? We're pretty bullish. And then there gets to this level and we're like, whoa, hold on. What are they going to do? You know what I mean? We gap up here because of contract rollover. That's what you're looking at here, a contract rollover on the NAS. But you're basically looking at, okay, the market is a little bit indecisive and uncertain. Whenever the market is uncertain, what do we typically do? Does the market rally on uncertainty? Does the market that's a better question. Does the market like certainty or uncertainty? Let me know in chat. What do you guys think? Do we like certainty or uncertainty? What does the market typically rally on? What do you guys think? Let me know in chat. So this is why we have this consolidation, because of news. We have this pullback. Why do we have that pullback? Well, I mean, there's sort of a general rule of thumb that what goes up must come down. Okay, you've heard that expression before, and nothing changes with trading. The only difference is that you have this sort of equilibrium. So if you were to try to draw a line, again, a little bit of art here. This is not a science. I don't believe trading is a science. I've always said it's sort of an art, and everyone's a different artist, right? You're going to paint your picture the way you see it. So, but it makes sense. If we're going to go up, we don't go in a vertical straight line. Nothing is like vertical straight line for too long. I mean, here's some vertical, right? We leave these gaps, we leave some inefficiencies, but price typically comes back to what we call an equilibrium, right? And this is why people use MAs and VWAP. They use volume profile weighted averages so they can see sort of where the highest volume is on the chart. I don't need to use that. I'm very good at trading without using that. So why would I introduce that to myself, I more focus on liquidity. And once liquidity is grabbed, what is the market saying at that point? What is price saying? When I say the market, I mean price, right? So on this time frame, on the 1-hour time frame, you can see we had a change of character down. This broke this candle body. See how this candle body closed below these previous candle bodies? So now we have a what? Well, this was our higher high. This is our high, right? So now we have, what is that? What is that right there? Somebody answer in chat. What is that? Thank you, Step. A lower low. That's right. And if you're watching on YouTube, chat is open as well. Yeah, a lower low, right? So we got a lower low. That's right, Lauren. Exactly. So we have a lower low. And what have we now got? We've got a downward structure on a 1 hour. So 4 hours up, 1 hour's down. So how do we make sense of this? Well, I'm going to show you. So we're going to go to our higher time frame, which is the 4 hour. And remember earlier we had our swings, right? We know that this is a 3 candle pullback. So we're going to a higher time frame, even though we're going to scalp today. Maybe, who knows? I told you we may not even take a trade. So this is all for just learning experience more than anything right now, because I'm not going to do anything until one of these highs or lows are taken. Okay, and price is just dancing right now. So, and it's probably waiting until the afternoon. It probably will consolidate and range until the afternoon. So this is kind of just a learning thing. But how do I figure out what to, what should I go off of, the 4 hour or the 1 hour? This is a very tough area to trade right here, because a lot of traders are probably not used to gaps like this. That's kind of weird, right? What do you do there? So what I do is I take a special tool that I've created, and I go from the high and the low, and you can do this with your fib. It's not like anything special, really. I'm just kind of messing with you, but you can take your fib and you can see the 50% line right here, right? So on this 4 hour, we're in an uptrend on a daily, remember? And so on this 4 hour, you ask yourself, am I in the green or the red? Am I in premium, okay, where price is expensive, or am I in discount? From swing to swing, tip to tip, wick to wick, am I in premium or discount? This is the first thing you want to look at. So I'm in premium, right? Okay, so in the back, boom, I registered that, I know. Okay, 4 hour swing from swing, 3 candle pullback swing to the swing highs. I'm in a premium in this range. This is a range. So you've defined, now you are learning what a range is. How cool is that? Right? So if you didn't know what a range is, it's from swing to swing. And there's micro ranges. We can get down to the nitty gritty, but this is a 4 hour range. So in the 4 hour range, I'm above that 50% level. You really don't even need a tool, just the measure, right? So you can see where you're at. Now what do? Now you ask yourself, so on a 4 hour, if I were trading the 4 hour, should I be taking buys or sells? And this is called the 50% rule. So that helps, right? So a lot of traders, answer me in chat. Should you be taking buys or sells, guys? Because I know we do have some new people, but I just want to make sure everyone's on the same page. Yeah, everyone type, same time. Let me see it. There you go. Yeah, we should be looking for sells. Thank you. Exactly. So now we go down to the 1 hour. Check this out. This is where it gets a little interesting. This is where it gets pretty interesting. So what is your range on the 1 hour? Okay, so I'm gonna go ahead and do the same thing. Watch this. The range changes. Look at this. On the 1 hour, check it out. So if the 4 hour, I was in a sell, in the 1 hour, I'm not in a sell yet, am I? But if I were, let's just say I was up here. If I were in a sell, I'd be in a sell on a 1 hour and a 4 hour, right? Those are two different time frames that are saying the same thing. Yeah? So do you think that you maybe should be looking for a sell when both of those align or when they're not aligned? And this is the definition of being a good trader. It's called patience. So do you wait for both of those to align if you really want the most edge in the market, and you want to accept? And now I will say your entry model has to be something that makes sense as well. We can get into the entry model. I'll show it. It's not hard at all. But I look for one thing. One entry model. There's a million different ICT concept models that you could go off of. There's a million different SMC, ABC, EFG, all sorts of stuff. But there's really one entry model. It's so simple. And it includes liquidity, market structure break, inefficiencies, and that's a fair value gap basically. And I like to buy high and I like to buy low and sell high. That's simple. Buy low, sell high. It's Jim Rogers. He's one of the most famous traders of all time. So that's what I listen to, right? So I would rather be selling if price is in this premium. Now, what do we notice right here on this 1 hour? Well, we can notice that there is a fair value gap. There is an inefficiency right here. Do you see that? Let me mark that out. So there's your 1 hour FVG. Okay. And price has not closed a candle body above it. It in fact filled the gap and pretty much bounced from the top of it. And last night when I was in that chat on X, that's crazy because it was last night. We were way back here on the 30-minute, and I typed in there, I said, yeah, I actually said price is going to reach the middle of this fair value gap. And again, this is just pure me just guessing what price is going to do, right? We had broken structure to the downside. Here, now look, watch. This isn't like really hear me here, okay? Stay with me. It's not a complete I just threw it out there. It did, look, price broke structure. What should we expect on these lower time frames right now? Well, I should expect if this broke structure on a 1 hour and on a 30-minute, if this broke structure to the downside, guess what? Look, on the 1 hour. Now check this out. You might look at this and go, yeah, but look, it broke structure here. No, that's internal structure. Let me show you something. Here's the highs. Okay. What created that high? Boom. There's your break, right? Now look, here's your swing low. Guess what you just defined right there? Now I'm going from wick to wick, but if you went from candle body to candle body, guess what you just defined? Somebody type in chat what I just showed right there. What is that? What did I just define? Come on, man. Try. Somebody try. It's not that hard. Just try. Thank you, Sam. Let's go, Sam. Yeah, I just showed you the range. We just went over it, but I know it takes a minute. Don't worry. So look, I'm going to define the range from the candle bodies. This is structural because remember, I like to see a candle body closing beyond these previous candle bodies. So here's my range high. Look, there's my low. That's the range. So now I've defined my range here. Let me take the sessions off so we just see candles, right? So now I have my range. So what is the saying? The saying we're in a downtrend. We've shifted. The market sentiment has shifted. We have a nice impulse. This is an impulse down, right? Maybe you can argue that that's some take profit. Maybe you can argue that's a sell to equilibrium. You could argue that that's a sell to go fill this gap, whatever. I don't care what your reasoning is, but it's a down, closed, bearish, engulfing, sure, candle, right? And what it does more than anything is that it breaks structure. It changes our character. It changes the market structure shift to the downside. So when I see this inefficiency, this from wick to wick is a fair value gap, right? Look at the left, look at the right side. So that's what I'm marking out. That's what the zone is. Right there. There's your FVG. When price goes back up into that spot, it's very likely, especially since it's very obvious, that's a huge inefficiency. And plus, and I'll just point this out as well, look at this fair value gap from the left. See this one? See how price just closed beyond that? That's an IFVG. That's an inverted fair value gap on a 1 hour time frame. So an inverted fair value gap is a very early sign that price could be shifting. Now you have an inverted fair value gap with a market structure break. You don't have any clear displacement at the breaker. So here is the breaker, right? It really doesn't, it creates the breaker because we break structure, but price doesn't continue because what I would like to see, what I would have preferred here, right, on this time frame, if I was going to trade the 1 hour, here's what I would have preferred. And here is the setup that I wait for. You ready? Here it is. I'm going to mark it out. High time frame liquidity up top. Check. That's step one, right? Am I in a premium or discount? If I was going to trade a 1 hour, then I would step up to a daily, okay? And I would do the measuring and I would see, am I in a premium or discount? Okay, so I need to be in a premium. Once price breaks structure, here it does, right? Closes this candle body below these previous candle body swings. Once price does that, I want to see continuation. Okay, I want to see some type of, like, let's say this is this next candle. This is the top of the wick. It kind of goes up a little bit. Let's just say right here, okay? Just a little top wick, and then it pushes down. What I want to see is I want to see this fair value gap. This would be a fair value gap from this wick to where this candle is. Like, this will be a pretty big fair value gap, right? But see how this overlaps the breaker right here? That's my area of interest. And I'm looking to take a trade in this breaker with that fair value gap overlapped. It's that simple. It's literally that simple. That is the setup. That's the one strategy for life entry model that accounts for 20% of whether or not you're going to be a profitable trader. The other 80% is A, how did you set this up? What is your risk management in your account? And I'm not just talking about like, everyone talks about R's. Don't get me started, man. But I'm not talking about like how tight your stop loss is. Yeah, this is, I want a 12 to 1. Dude, just put your stop back here. Give yourself some room, man. And you might actually become a profitable trader. When you're doing this and trying to do what everyone thinks they're so smart doing, but you're losing, this is why you're losing. Just do this. Again, I have strong opinions on this. I'm not saying I'm right, but how is it that I'm continuously profitable? How is it that and I'm not trying to brag, guys. This is I'm just saying, how is it that I'm winning? How is it that a lot of you guys, if you're up, look, guys, type W if you're winning in chat. Type W if you know what I'm talking about is a fact and it's helped you actually make and be a profitable trader. Like, be honest too. Type like something else. Type, I don't know, if you're like not sold or you don't know. Like, type something else. You guys that have been trading with me, you already know. It's a fact. There's nobody that's even going to say it because what I'm saying is a fact. And I've just been trading long enough to know. So widen your stop. Why? Now, here you might say, oh, yeah, but man, then you're like, your risk to reward isn't there. And, you're not going to make up for the losses. Like that one time, bro, that it goes all the way to your stop loss, but then you're taking all these small wins here and small wins here. Again, this is why I go back to, you need to understand structure, because once I'm in this trade, right? Let's say I'm in this trade. Once I'm in here on a 1 hour, what are we doing, guys? Once I'm in this trade, what do I do? Somebody type in chat what I do. Once I'm in a trade, what do I do with my time frame? Yeah, manage, Lauren, yes. What do we do with time frames once we're in a trade? We zoom in. Thank you. Yes, we zoom in. So I'm going down here, bro. I'm probably going to go to like a 3 minute. And what I'm going to do, remember where I had my stop way up high, right? And everything. All right. So what I would do is I would mark this 3 minute structure. I would go something like this. Structure right here, right? So let's say price is like, I'm in profit right here, comes back to a shelf. Understanding shelves is very important. So, every time you leg down, you have a shelf. Okay. Market came back here, tested a shelf right here. All right. Kind of ate into that a little bit. That's your tell sign that this may go up actually, which I think it did, right? It did go up. That's your telltale sign. It didn't respect this shelf. See this shelf? It didn't respect this shelf. So anyways, that's a telltale sign. Also wicked off of the bottom here on this next can. Anyways, yeah. So I would expect price to move down, right? And as soon as price does something like this, guys, look, here's your shelf right here. I'll mark out the shelf. Hold on. These are shelves, right? And so it should go like this if it's going to continue, yeah? But as soon as it does something like that, right? Or I'm going to mark out another example too. So it doesn't respect that shelf. Or as soon as it does something like this. Now, what is this? Well, let's just say hypothetically there's a fair value gap right here. And it closes inverting the fair value gap. Do you think I'm going to stay in the trade? And this is the problem. People, like, I'm just telling you what I see. And I know because I have you guys that trade with me every day. And you guys know, once you start managing your trade in that way, what happens is, so if I were to ask you guys, if I were to just zoom back out to this 1 hour, right? And we just legitimately say, do you think that you would have time to manage this trade? Do you think you would have time to manage that trade? Yes or no? Is it more likely that this trade is most likely going to be in profit at some point for you to manage it or not? And of course, this is a 1 hour time frame. So remember, once we're in the trade, we zoom in, right, to like a 3 minute. Here, let me give you a stat. 96% of all trades that you take, you're actually in profit. Now, to whatever degree, like, so meaning you take a trade and you're in profit at some point, okay? Now, to whatever, there are, I'm going to say 4%. And I'm making these stat up, okay? Because I've been trading for 6 years. I know kind of relatively, I can tell you there's very few trades where you enter and it's just gone. It never, ever comes back and gives you any chance to like manage your trade, right? So if you have that chance to manage the trade, do you have an ability to manage it? Meaning, do you know what you'd be looking for, right, on that lower time frame? So if you know that most trades are in profit at some point, then you're going to use what's called a break-even stop a lot. And that's going to protect you a lot. And yes, it's going to be annoying. And you're going to have so many break-evens, you're going to be like, oh my gosh. But guess what? You're going to preserve your balance in your account, especially if you're a new trader. So something like this gives you a more of an opportunity to manage your risk. And that's why I say these kind of stop losses right here, they're for jokers, bro. They're for people who either they're for people. I would never train somebody like that. Is what I'm saying. Like, yes, you guys see me, I scalp all the time with tight stops, but that is 7 years of trading. That's different, right? If you're gonna just go into the markets, then this doesn't mean bigger risk. That doesn't mean you're gonna risk 20% because you have a deep stop. It means you're just giving yourself some more room. And all that you need to do is wait for you to get in a little bit of profit here, right? And guess what? You can close in profit. Look at that. Did you see what just happened? Let me roll that back one more time. Look at the bar. I know you already know it. I'm not going to beat a dead horse. Don't worry. But look what happens, guys. Where did it go? Was it in profit or not? Right. So if you held, but then you didn't know what you were looking at, let's go ahead and go down here on a 3-minute time frame, just like what we said, right? Look, so would you close this trade if you saw this? And that's the question, right? Would you have the experience, or would you know? Here, look at this 5-minute. I can even look at. Look at the kind of like what, this would be like a 5-minute turtle soup, dog. But like the idea here, right, is that you see price, it dips below the range, comes back up, disrespects the shelf. See this? It eats into the shelf quite a bit, right? Almost creates a break of structure here. This is your break of structure on a 5-minute right here. 3-candle pullback right here. Boom, right? So I'm going to mark that. That was my 3-minute up there, but this is my 5. So it hasn't broken structure yet, but guess what it did do? It had an IFVG right here, an inverted fair value gap. So that fair value gap gets inverted. So it's an early sign. So guess what I'm going to do? I'm going to take this. Look, if I entered there, look at how much I'm saving, dog. Look, this is why this is what I'm trying to say, man. I'm out of that trade right there. I'm out of that trade. No doubt I'm out of that trade. Look what happens though. Look what happens, okay? Let me play this out a little bit. That move was right to get out of that trade. It moves up, right? So had price, let me show you something. Had price, now I get out of it, but look, this is a 5-minute time frame. If I go back to my hour time frame, which was my assessment, right? I can look now and look what happened. It's like ranging. It's not really dipping at all. If I want back in this trade, I got to find displacement on a lower time frame with the same setup and get back in the trade. So in my opinion, again, my humble opinion, and it is a humble opinion. I'm not trying to say I know it all by any means, but as a community, if we can talk about these things, we make each other better. And what we don't want to do is say I'm right and everyone else is wrong, and your opinions don't matter and all that stuff. I freaking hate that. I hate when people go down that road. So what I like to do is just point out what I've seen over the last 7 years to the best of my experience. And what I can tell you is when I see some stuff like that happen, and then again, just going to point this out too. Let me go down on that 5-minute. Look at the time. Look at the time. Time matters more than price, right? What do we know happens around noon? Look at the lunchtime. It's just not enough volume, man. It starts to stagger. So if we're trying to break out from what we know is a 1 hour, break of structure, and we're trying to get some volume down here. And dude, come on, let's be honest. The entire market sees this freaking gap. The entire market sees that gap. So what do you think more people are doing? Buying or selling? Probably selling. So the market's not just going to give it to you. So like that time period comes around and I'm going, that volume just is not going to be there. So is it the right time to lay on the gas? Or do I cut my loss super, super short. Because guess what? If I was right and this went and filled the gap, that would have been a huge win, right? But if you're wrong, look at the loss. I don't have to necessarily let things set up like this to hit my stop all the way to my stop just because I want to be right because of ego, right? I do. I think it's a little bit of ego, especially from me. I live stream with you guys every day. So it's like, there is a little ego there, man. I don't want to be wrong. I hate being wrong. You guys know I hate being wrong, but it's, you have to preserve your capital. You have to play it smart. And, so, if I'm trading in the wrong time, what can I do? Guys, type in chat. What are some ideas for me if I'm trading? You guys, you already know. What can I do if it's not a perfect setup? If it's trading at the wrong time, what can I do? Or maybe I'm buying in a premium, but it's a great setup. But man, I'm buying in a premium. There you go, smaller size. Thank you, Kev. Take a nap. Thanks, Sam. Check other time frames. Yeah, you could check other time frames for sure, man. Eat lunch. Guys, are you guys hungry? What's the deal? All right, yeah. So basically, let me get out of this bar replay and go to where price is currently. Now I do, let's talk about SMT a little bit because I do use SMT as, what is it? It's an odds multiplier. Now there's a lot of guys out there, man, they're going to be telling you what they think. And I think there's some guys are really just, all they do is trade SMT, which is a Kraken correlation between these three instruments that I'm looking at, which is the NAS, the ES, and the Dow. So you can see here, according to, we'll call it quarterly theory, basic quarterly theory. I don't think, my opinion is that the basic quarterly theory is really all that really matters. I don't think any of the other stuff is relevant, at least for what I've looked into and learned. I'm profitable without it, so I don't know what to tell you. That's why I don't care. So if you want to learn it more, go learn it more. I don't care. But you can see that the NASDAQ took the highs from, let's look at the pink and the green boxes only. So you can see the NASDAQ, according to the last cycle, has taken the highs and the lows. Yeah. The ES has not taken the highs, and the Dow has not taken the lies. They've not lied. Stop lying. They haven't taken the highs, but they took the lows. All right. So what does this mean? Okay. So what would matter a little bit more here, first of all, this cycle is not closed out. Each of these cycles, these colorful cycles in here, are an hour and a half. And then the outer cycle that you see is 6 hours. So you can see the outer cycle from this green box to the red box, right? So what I don't like, and what is less probable, so when you see the highs taken, it would actually be easier to start here. Check it out. Look at the outer boxes, the green, okay? You see how the NASDAQ has taken the highs of the red box? The ES has taken the highs of the red box, yes. So we have two that took the highs, but one didn't. See this? The Dow did not. So when you have that happen, and what throws this off is that the ES took the lows, but this is kind of like a turtle soup. It's jumbled. There's no real direction here. But if, let's just say hypothetically, the ES did not take the lows, the only one that took the lows is the Dow. And the Dow didn't take the highs, but these two took the highs. You see how that works? So they're off. Two are offset from one. Then what that means is a reversal is inbound. That's it. It's a reversal inbound, and reversal is incoming. So you could look for potential reversals. So if I was looking for a potential reversal, I would look for liquidity first, right? Because that's how I work off of liquidity. I want to find areas that the market is most likely to reverse in. And I love longs with the NASDAQ in a bull market. So I'm always looking for reasons to dive in, even if it's a scalp. But that's how I'm using this, is very light. I'm not going real, hard with SMT. It's just not, to me, it's not really worth it. You can also look here and very clearly see the tops, right? So this is also considered SMT. This is basic SMT, where you have a higher high, see up right here, and then the same range. Look what happens over here. Look what happens over here. You see how these two are slanted down and this one's slanted up? That's SMT. And you can see that did play out. That absolutely played out. You have two that are dragging the one down. And that's the way you look at it. These two, whatever two, are going to team up on the other one, on the last one, and force it in the same direction. That's the way you can kind of look at SMT from a basic standpoint, not even a quarterly theory standpoint, which is a whole different level. But again, I don't really use that too much. I just come over here, I look and see, do we have any high time frame SMT, low time frame? And because this took the low, the NASDAQ took the low, the Dow took the low, okay, nothing's different there. And the NASDAQ took the high, but these two didn't. It was probably on a smaller time frame, like a 1 minute or something, and that already played out. So I missed that little move. But over here, when I'm looking at, whether or not the NASDAQ took liquidity, if I put my session ranges back on, this might be a little bit easier to see. You can see that we took the highs. So NASDAQ opened up. This is the open, 9:30. We took the highs 5 minutes before then. So highs were grabbed, market opens, pushes down. Now we grab session low. This is New York session low down here, right? Pre-session, I should say, pre-session. So we grab those. So I'm really waiting, right? And I could put an alert right here. I'll put an alert right at London lows because those are interesting. We also have the market high, so I can go over here and now keep up to date with all of my ranges. Because if, hey, let's be honest, if you don't mark them, you're probably going to forget them, at least for me. So that's a high of day. So HOD. So there we go. That was kind of like some teaching in there too, but very quickly, you just want to mark previous day high and low. If you don't have a previous day, go to your weekly, then drill down to your sessions. And then once you have the sessions in the previous day and previous week, go to a 4 hour. And the 4 hour is always an interesting one to look at. You want to just look at wicks that have not been tapped. That's it. That's all you're going to look for. Interesting areas like this range. I don't even know why I don't have that marked. That's weird. That's a previous daily low, so that should be marked. Maybe I accidentally deleted it, but there's a PDL. I'm looking for a previous daily low. So that's an interesting area. I might wait. See, this entire range, by the way, is in between that daily 4 hour candle. Like everything that we're doing right now is inside of this one candle. So we already know that that's our range from the high of this body to from these blue lines. We already discussed how to find a range. So now we're just dancing inside that range. So technically speaking, if you wanted to get a little bit more confirmation, you would really want to wait until you've broken this range, either to the highs or to the lows, and maybe be looking for something at that point. The problem is if I'm going to sell down here, then as we know from what we discussed earlier, if I do this, what am I doing? If I'm selling after price breaks this range, I definitely want to make sure that I'm still in a premium if I want the best possible range for my sell. If I'm not selling in a premium or buying in a discount, then the distance that price moves may not be as much. And that's the way I kind of look at that. So there we go, London lows grabbed. So what we can do is kind of look over here on the 1 minute now. Okay. So there's that target grabbed right here. And we can see what price wants to do. Obviously, out the gate, a little bearish. You had this rising channel. So a little bit of a rising channel. I'll show you guys this particular setup all the time. Cut the fat a little bit. Majority of trading was right there. Price dips, grabs liquidity. Where's the liquidity on this 1 minute? There's a lot of volume in the market. Liquidity gets built up fast, man. So right here, right? So you might as well go take out those London lows. Now, what am I looking for? Well, I'm in a premium. Remember, I'm in a premium on that, on the 4 hour. On the 1 hour, I was teetering, right? From premium to discount. So we grab, do we have any displacement? What is our, so let's talk about this. If we want to go long, what would we be doing? We'd be buying at what? A premium, yeah? Okay, so what's the market structure shift? right here. This would be your chalk, right, on a 1 minute. And so let's check out a 5. Okay, it'd be the same on a 5. Let's check out a 15. Well, the 15 is going to be up here, right? So your change of character on a 15 is up higher. So what trend are we in on a 15 and how much time? Well, we got a minute to go and we are still in an uptrend. So I'm using my time frames to determine if price is actually swinging down or maybe this is a grab. Okay, so I got a minute to go on this 15. I know that if price closes below this range, that on a 15, we just changed character to the downside. Okay, I also know I'm in a premium. Is this starting to add up? All right, so we'll see. We got to wait. We got to wait for time. So we wait. And at that point on a 15, where is my breaker? All right, pretty big breaker right here. That would be my breaker. Would I have a fair value gap? Not really, because this is kind of choppy right here. So not my favorite place to trade, but we have another zone right here where we could potentially be dropping, who knows, 37 seconds to go. If price respects this range on a 15, let's just say hypothetically next candle opens low, meaning no top wick. What do all these candles have? A top and a bottom wick, yeah? So if it opens low, I could potentially look for maybe something on a lower time frame. Let's zoom in now again. But it doesn't look like it's going to give it to us. Market is pretty choppy right now. But it's, again, first 45 minutes of the session. So you can see market pushing up, right? All right. So there we go. It just closed. That 15-minute candle closed, respecting the range. So it hasn't broken. So I know we're not on a downtrend on a 15 even. Let's go to the 30. You can see on the 30, that's not really a pullback. We still have this range on a 30. Yeah. So we're still in a downtrend on a 30 from back here. We have internal structure, but this is our external structure from high to low, right? We change character on this 30 minutes, cruising down. So anything that happens in this range, any price movement in this range right here is internal structure. It is not that you can't trade it, right? But you may want to lay off the gas a little bit. So price grabs London lows. A lot of traders would just be going long. But we know we're in a downtrend on a 30. We're in a downtrend on a 1 hour. We're in an uptrend on a 4 hour. And we're in premium on a 4 hour. Yeah? So we could see a little bit of a fade pull back. That's what that 1 hour and that 30 minute are saying. Hey guys, we could pull back a little bit here before maybe continuing higher. So what can we do if we wanted to go long? What could we do? We'd have to look for a setup, right? A setup. Do you have a setup? Well, let me show you what mine is. And this is the only setup that I use. It's very, very simple. So this 5-minute structure up here, I like that. I'm trying to go through my time frames to see. This is so messy. All these wicks up and down. It's very messy. So I'm trying to see if there's anything clear. If there's an inverted fair value gap at a breaker, if there is a little bit of volume up here, something to sink my teeth into, but there's really nothing. So what should we be expecting? Let's roll through it and just make sure we're on the same page. We should be expecting a lower low. That's what we should be expecting. We should be expecting probably what this probably ends up being is a pullback on the 4 hour. But right now, it's impossible because we're inside of a range. Okay? So it's not going to be the highest probability when you're inside of this 4 hour candle. What I think could happen, my take is that we need to see, because if this grabs London lows and can't make a higher high on a 1 minute, it can't break structure on a 1 minute, and we end up failing. Because check it out, if I do premium discount on this 1 minute range, right, here's from wick to wick, there's your premium discount on a 1 minute, right, or even a 5. You can go up to a 5. It's the same. It's like the same. So what I see is on a 5, you have a higher high. Yeah, this created the high, and candle has respected. They have respected this range, right? So you really don't have anything. You don't have anything down here. You got to wait for that to be broken and closed. Once price breaks this and closes below this range on a 5 minute, you might have more opportunity for a sell model. But until that happens, there's really nothing we can look at. And I got to be honest, the area that I'm really looking at is this right here, because this is so messy. That's all. It's just really messy, right? So if we can get, look right here, if price can get some displacement, some volume, right? Show me that this is actually going to break to the downside and closure with the candle body closing. I know this blue line is still within my 1 hour range. So if she can get some volume and break on this 5, I'll probably end up zooming out to the 15 today and taking a setup on the 15. I'll probably end up doing that just because the lower time frames aren't really clean. It's just very messy in here, right? So if I'm gonna sell, I want to be selling in that premium. If I'm gonna buy, I want to be buying in that discount. Right now, in between the range. But look, price is showing us that it potentially wants to go down. Since we've opened, it's been a little bearish. I mean, since we've opened, but this first like 45 minutes to an hour is the market getting the kinks out anyways. So guys, if you're finding value in the video, you know what to do already if you're watching on YouTube. But this is sort of just a patience game. I mean, I've got to be honest, like some days I get in here and it's funny because Wednesdays seem to be the days for whatever reason that price is a little bit more difficult. It's the middle of the week, you know, one of those middle of the week days. You're just like, all right, what are we doing? You know, are we going up? Are we going down? And in between this range is just really, really tough to make a call. Had we not punctured this with this wick and created displacement on this close, I could use this as a breaker potentially, at least the lower part of the breaker, and see if we could get in a lower time frame. But it's not very clean. So that's my hesitation. But like I said, I do think that we could be potentially dropping down to previous daily low and ultimately filling some of the range and gap below because I just know that everyone's looking at that. That's going to be an attractive place. You know that a lot of liquidity is sitting down there. You don't even know, like price doesn't even really know what orders have been left behind in this area, you know, so it just seems highly probable that we dip before possibly exploding to the upside. And so we'll take a look here. 1 minute displacement looks kind of nice. We need closure below that range. So this needs to be a volume candle, all right? If we can see some volume here, then it's a little bit more believable that this is going to be a leg and this is going to be our shelf and we can treat it as such. But until I see that, even on a 1 minute, I'm not really keen on doing anything right now. You guys still with me? You guys all right? Mitch, I kind of went over SMT a little bit, brother. You know, it's an odds multiplier. You know, I don't really see anything anyways. So look at the green, look at the green, right? The teal, whatever that color is, and look at the pink, right? And so what you ask yourself is, what doesn't align, right? You got the NASDAQ that took the highs from the pink, right? Did the ES take the highs? No. Did the Dow take the highs? No. So what happened? So there was a reversal. That's your early indication. Already played out. So they dipped. So now that we're down here, now what? Well, there is no SMT. They're all at lows. So you look at the outer boxes and it has to be sequential. That's the key. You don't want to look, if I zoom out, you can always find SMT. Oh, look at this box is here. And then this box is going to take that box that was 5 boxes ago, whatever, 3. That's called, that's not SMT. That's not sequential SMT. It's not as what I would consider what is really taught when it comes to like quarterly theory, especially. So not that, again, guys, this is just my opinion. I don't know. I like saying that because it's just, I don't want anybody thinking this has to be the way that you do it or whatever. Time is always going to be more important than price because the time determines volume and volume is what we trade. So I'm going to take a look at some other charts here in a second, but this is actually really interesting. So this should be a volume candle. If we're going to break, there should be some volume here. Let's see what happens. All right, so this blue line, the 1 hour range, this is this is what I'm waiting for. Once again, I want to see that volume. It's kind of having some difficulty here at the London lows. It's your 20th wedding anniversary today, Robert. Man, congrats, brother. That's freaking awesome. That's awesome, bro. Congratulations. Yeah, sick. It's crazy. I've been with it'll be my 10-year next May. But my wife and I met her when I was 24. She was 19. You know what I'm saying? Oh, anyways, yeah. Yeah, we've actually been together since '06. Yep. Yeah, I found her young, pure, innocent. Yeah, my wife is awesome though. That's awesome, Robert. Congratulations, brother. Yeah, it's always been like I was a touring musician for years, and I never thought I'd be married. In fact, it was my manager at the time. His name's Phil Ivey. He was a lead singer for a band called Portrait back in the day. They were on Arsenio Hall. They opened up for Prince, whatever. And I'm sitting in the studio with him one night, and talking to him about Deb, my wife, and he's like, "Why haven't you put a ring on it?" Big, and this is a big, tall, black dude. He doesn't mess around, dude. He just tells you like it is. Good looking, one of the best singers I've ever heard. And anyways, he's just like, when you get married, it makes you stronger, bro. And I'm like, well, I don't have the money right now. Things just were. I wasn't in a great place because I was doing music. And he's like, bro, this is the fastest way you go and get money. You know what I'm saying? And he's like, breaks it down how you become a superhero pack. You become double strong. You become like this superhero basically, right? When you get married. And I walked out of the studio that night and I had a whole different perception of marriage, and I wasn't scared anymore. I was a scared little boy. That's what I felt like anyways. But yeah, man, I asked her to marry me. I found a ring. One of my it's crazy. One of my really good friends asked his fiance to marry him. They were supposed to get married. He goes and visits her family. Beautiful. And this guy's got a lot of money. He's got a lot of money. He visits her family and everything. And he finds out he doesn't like her family. And so, dude, he calls it off, right then and there. He called it off. She gave the ring back. He didn't want the ring. I said, bro, I'll buy that ring off of you. It's such a nice ring. I'll buy it. Someone's going to find love in that ring, bro. And instead of spending like 12 grand, which he got it for like 12 grand, he sold it to me for 6, which was like a lot of money for me at the time. It was a lot of money. I didn't know how I was going to pay him. He's like, bro, just pay me $50 a month. I don't care. I was like, are you serious? So he gave me like a $12,000, special ring it was made, specifically. It was like a jeweler made this ring for him. It was pretty cool, man. And, yeah, that story, I didn't think about how that story would go over with my wife until later. So, if you can imagine, yeah, that story kind of didn't go over very well with my wife. Because she's like, "What? This was a ring that was thrown out and like has bad juju or something." I was like, "No, babe, that's not the way I looked at it." I'm like, "This ring has love in it, so someone's gonna find love in this ring." But it wasn't the ring that mattered, man. We've been best friends, and man, when you have someone that clicks, it's a pretty special thing. I know it's hard to find. A lot of people spend their whole lives, they never really find it. And man, I don't know. I don't know what the secret is. But yeah. Anyways, yeah, so price is kind of dancing in this range once again. And on this lower time frame, what do we have? We can just obviously I have the structural break up here. We just have this downtrend, right? So until that really starts to play out and continue or reverse, then we're just kind of stuck. But we want to see price continue, nice little push. We want to see this shelf get respected, so maybe a pullback to that shelf. A lot of breakout traders, if this is enough volume down, they will be taking this short right here, expecting a move lower. For me, that's not my entry model. So I'm not keen on just taking a trade right there, especially since this blue line is the 1 hour range that we technically need to break. Yes, we break internal structure, but remember what I said, in between these blue lines is internal structure. So don't get tricked. A lot of traders will get tricked in this area. You just have to remain patient. And a lot of people don't have the patience to do that. So that's why they don't trade profitably. I don't know. That's just my opinion, you know? So yeah, just kind of waiting for that to break out of that range. What else? Let's see. Let's go to the 1 minute. So we break structure on a 1 minute after grabbing high time frame liquidity. We're in a premium, so let's keep that in mind, but I am going to line this out a little bit because we do have a fair value gap here along with a kind of a weird breaker right there. See the volume here? There's decent volume happening right now. Nice little W pattern potentially. We got our break up here, break structure. We're not breaking 5 minute, but we're breaking 1 minute. So if you were to take this trade, I'm going to line it out. I'm going to line it out as a micro trade. Don't take those highs, man. On the pullback, you're going to get in on this trade if you're going to take the micro trade. Okay, it's going to be lower sizing. You're in a premium. You're going to be very careful, and you're going to widen your stop so that you have some room. You're going to make sure this is at least a 1-to-1 though. So this needs to be a 1-to-1 ratio right here. And you have high time frame liquidity, grab, check. You have a break of structure, check. You have a fair value gap, check. You can take this at the breaker or in the fair value gap. I prefer the fair value gap or close to it because you get a little, the cheap trade would be down here. What's a cheap trade? Well, if price reverses, and hopefully it doesn't grab the liquidity up here first. I really prefer it not to. If price reverses, okay, and closes the candle body, say like this, guess what I do, guys? I close my trade with a smaller loss than I would have normally lost, and that's called managing your trade properly. In my opinion, again, some people say set it and forget it, man. I'm so rich, I just set it and forget it. Okay, well, I don't know who you are. The people that do that, I don't know them. I've never seen their broker statement. I don't know what to tell you, right? I show you my MT5 every single day. By the way, hit 217 yesterday in the account. I'm super pumped about that. And yeah, man, let's keep that going, right? Actually, pretty much 218 is 217,994. Okay, so there's the entry. So we're gonna go ahead and make our move. Keep our eye on price. Let's actually wait for that candle to close. Let's wait for that to close. I want to see that respected. If it starts bouncing quickly, I'll get in, but if not, I'm going to wait for it to close. Okay, I'm going to get in. All right, so there's my entry right about there. Let's see if we can't make it a cheap trade. I did a light sizing. What did I tell you? Light sizing, yes. So there it is. That's my entry. I don't lie, my friend. We go for I want 218. Is 217.9? I want 218 at least. Come on. Now, what did this do? This pulled back into a discount. Look, check it out. See this? So technically, this is a premium. Excuse me, I said discount. This pulled back into a premium for sellers to continue moving down, but we broke structure up on a 1 minute. Keep in mind, small little time frame, tiny time frame. Okay, so we're going to be aggressive. We're going to have a break-even stop fairly quick. And if you're trading a prop account, this is the way you'd want to probably trade something like this. We could pull back into, and I have a cheap trade. I have a very low lot size trade. And my stop loss could be deeper if I wanted to without hurting anything on my account, not even coming close to like even 1% of a drawdown. But technically we could pull back into this lower quadrant, this lower region where you have a order block and price could still move up and not break structure. So where is the break of structure, right? So line out your range. Where's the break? Right over here. I have it right here. So price could technically do what? Price could come anywhere down here. So just know that. And if you're uncomfortable putting a stop here because your chances of getting stopped out are higher, then do something like this, right? And I always say, you want to make sure you have a 1-to-1. So there's your there's your 1-to-1 right there. Plenty of time to get into this trade, plenty of time to make the decision on what you want to do. I would say low lot sizing, just like I have low sizing. Don't stress over the sizing. That's what you don't want to do. You don't want to stress over your lot sizing, over your contract sizing. You don't want to stress over that. You want to have a trade where you're just chilling. You know why I get stressed out? Because I'm streaming, because I have you guys, because nobody wants to have a bad trade, but it happens all the time. And I'm perfectly fine with that. I'm perfectly fine with having bad trades because it's going to happen. But we try to not have bad trades, right? That's all we can do. Okay, so a little bit of a doji candle stopping that momentum on the pullback right into our upper part of the breaker. This looks like it could potentially maybe, well, if it respects this zone, then we would see it bounce to the highs, and this liquidity was never grabbed up here. So we do have a chance, yeah? On a 5-minute time frame, let's go up to the 5. What has changed on a 5? Well, nothing. You basically pulled back into a premium, you closed the gap, and that's kind of a bullish sign. When price closes the gap, respects this wick test right here, right? You see this previous wick and how this wick respected it and didn't like dig deep inside of the bottom of this candle. That is a good sign. That means that it could be just a wick test, a continuation. See this candle here. Let me tell you something about this candle that I see. After 7 years of trading, this is what I found. That's a title right there. That's what all the YouTubers' titles are, right? After 10 years of trading, this is what I found to be the most profitable. I made 100 grand in 1 month. Here's how. Anyways, okay, so this candle ran out of steam without a top wick. See how there's like no top wick here? All right. So when you see a candle without like any type of top wick, that's why this candle created the top wick, but there's zero range. There's not really a range. So a lot of times you will see a little bit of a reversal after candles like that. It shows like, okay, you might see this and go, oh, it's a bullish engulfing. Yeah, but it has no range. So it's important to understand that. I don't know if it's important to understand. It's an odds multiplier. When you have ranges at the end of your candle, it's more probable for you to continue. When you don't have a range, a lot of times you'll see the next candle create the wick that isn't there, right? And then you'll see a little bit of a reversal. So, but there is some selling pressure and some buying pressure. It looks like kind of we're just in the middle right here. And that's why I say just really low lot sizing, aggressive with, if we can get into profit a quarter of the way up, that'll be our signal to basically set a break even stop. And it's kind of annoying because you will get your stop hit fairly frequently, but you also protect your capital, and that's the most important thing. Cool. So high time frame liquidity, check. Break of structure, check. Fair value gap, check. What don't we have? We don't have buying at a discount, right? That's all. That's the only thing that we don't have. So we're going to reduce our sizing. We're going to basically go in low lot sizing and see if we can get a chance to manage the trade. It's that simple. Any questions, just type it in chat, guys. Any questions, type it in chat. Let me know. What's the trend on a 5? What's the trend on a 15? We don't know yet. We got 7 minutes to go. We're hoping that this closes within the range or possibly pulls up to a higher low. That's all that we can sort of look at on a 15. Yeah. 7 minutes to go. So waiting for this candle to close. That's it. And one thing I want to point out too is that we saw a minor impulse up. So we have multiple candles impulsing. So it's a minor impulse. So it wasn't like a major impulse, but that is a minor impulse. Sometimes those impulses are early signs, early indications of continuation. So let's see here. Not quite at a break-even stop for me just yet. Very, very close. Very close. Okay, see these wicks, internal wicks? All right, so I hate to do this, but yeah, I am going to. Now you could close a portion of your trade. You could create a break-even stop, whatever you want to do, man. But this is where I get a little bit meticulous with my trading. I like to protect my capital early, especially if I'm in a risky area, which I am. So I am actually setting the break-even stop as we speak. And I have right now on this trade, I have 10 lots for the sizing. So it's a micro. I'm taking half off the table pretty much right now. That's my first trade of the day. So I've secured profits. And then what I did was create a break-even stop. So nothing can F with me. And I beat the markets. That's it. That's all that matters every single day. That's it, guys. Got to go later, Dakota. You left right during a trade. You're an a-hole, bro. No, I'm just kidding. Love you, dog. See you tomorrow. Yeah, so that's how we protect ourselves. That's the definition of just like, in my opinion, and this is what, if it were not my first trade, let's say I was trying to come back from a loss, okay? This is how I play it. If I'm trying to come back from a loss, I would probably, if I were break even, I would take my profit and close out. All right. That's how I do it. If I'm coming back from a loss, as soon as I get back to break even, I'm out. I'll wait for my next setup. If I was in profit for the day, right? If I already traded one time today and I was in profit, I would have set the break even stop and let it ride. Okay. Do you understand? So there's different money management, things that I'm doing for money management depending on the setup. Okay, so this is a winning trade, so cool. Now this is your TP level, and it doesn't mean you get out. It means you trail stop. Where's your trail stop? Okay, so thank you guys. Thank you. It's funny, I don't think YouTube can hear any of the soundboard stuff, but this is a spot where you want to be very careful. This is a spot where price can reverse. So what can we look at? Well, let's go down on our lower time frame, like a 30-second. Remember how I told you money management? So check this out. You now have the ability to understand how to manage your trade via price action. So what is this? This is called a fair value gap. Sorry, I don't even know if I have a, yeah, there it is. There's a 30-second fair value gap. Okay, if price closes over this gap, I'm out. Now, where can my trailing stop be? Well, I don't, unfortunately, this trade, you don't have a shelf with a retest, and that's what you want to look for. So you do have a shelf incoming. Here's your shelf. Okay, so when that, yeah, you could basically say that retested. That needs to have another leg. Okay, creating some consolidation, right? We have the consolidation, manipulation, distribution, yada yada. So power of 3 needs to happen within a lower time frame. That's all. So all we're doing here is we're looking at the 30-second fair value gap. Do we have another one? Okay, so price pulling. These are very interesting areas, so you got to be careful. You could probably, depending on, your risk management, you could put your stop right below that shelf. There's no reason for price to disrespect this shelf unless it's going to dig deeper, and you don't want to risk losing profit. If you break this shelf up here, incoming, this is your new shelf. Sorry, guys, I'm a little slow right here. This is your new shelf, right? All right, so if price breaks that shelf, you move your stop loss up, but you got to give it room. You got to let it retest. It's probably going to do that. That's just the way price works, man. It retests. Okay. So nice little break to the upside. I'm still in the trade. I still got it going. Look, just the proof right there. You can see my entry, right? You can see my profit. Right? Very light sizing. This is not, I know you guys see me with way more sizing than this, but remember, I bought at a premium. Where are we over here? So I'm not gonna, it doesn't mean you can't buy, it doesn't mean it's not going to work out momentarily, right? That's the whole point of showing you. I'm just trying to make sure that money management is on point. And look, guys, 218. Let's go. 218. Finally hit it, baby. So now we can zoom in. We have that retest. There's a retest, that red candle retesting the new shelf. It's a zone. It's not perfect. It's a zone. Nice little break to the upside. Excuse me. Let me pull this further because we're not out of the trade, obviously. Oh my gosh. Okay, let me get rid of this. Get rid of this. Okay, so now what's the ultimate outside liquidity target for this range? Well, I'm on too low of a time frame. There we go. So now we break structure moving up. Ultimate target for the outside of the range is here. This is your 5-minute range, right? So what are we in right now? 5-minute fair value gap. So what do we know if price closes bullish above this fair value gap right here, right? If it creates a 5-minute IFVG, what do we know? Well, we know a couple things. We know that A, price is broken structure. Here's a structural break. If it closes in 28 seconds with a candle body above this previous structural high, lower high, then we know that this is actually a market structure shift. So this is a chalk, just like that. And we got, 10 seconds to go. But look at it respecting the fair value gap. I want this strong. I want this closing strong. I don't want to have any reason for price to turn back down. I don't love the way it's open high. See how it opens high? No bottom wick. So it's going to probably come and create that bottom wick. So if we go up higher, all right, so we create the bottom wick quickly. That's fine. So I like that. I don't like if we go too high without the bottom wick. I'll just get out of the trade. But we create the bottom wick. I want to see that bottom wick retest this new shelf on the 5 and then bounce off of that and move higher. That's what I would prefer to see. This is not too much of a bottom wick. Not too much of a bottom wick. I want to see that bottom wick retest this little zone, but that's fine. Okay, go to a 3-minute. You can see the wick test would be here. So this wick didn't really test it. We could still flip and test. Let's go to the 1-minute. Where's our shelf on a 1-minute? It hasn't really changed. We have this shelf. Let me get rid of the 5-minute shelf, and we have this new shelf created here. What has not been retested, but that's okay. I want to see a leg up with a new shelf, and then we can move our break-even stop. So let me define the break-even stop a little better. If this has been retested, I guess we can consider that a retest. Okay, so we can consider that a retest. What am I doing here? Not break even. I'm sorry. Trailing stop. TS, trailing stop. Okay, this might get hit actually. 143, 150. Come on, baby, pull up. That might be the retest. Actually, that might be the retest. I'm not trying to squeeze more out of the trade than I want. This is a great win. It's not that. It's just there's really no reason to get out of the trade if it's not showing it. There's no fair value gap here. There's nothing to go off of. And we don't have a clear shelf until down here. You see that, right? There's no clear swing shelf. So I'm just marking this. I think that's got to stay. Yeah, I think I'm going to hold. I hate to say it, but I'm going to hold if price closes, because I don't want you guys to lose any profits, right? But if this closes like this beyond that shelf, I'm out. If not, I think it could continue. I'm not trying to be greedy at all, guys. I'm just, I'm trying to squeeze the most out of the trade. That's what you're supposed to do. That's the name of the game, man. Knowing when to hold them, knowing when to fold them, and we're using price action to show us the way. Do you guys like this, by the way? Drop me a comment or something. Like, I don't even know why I'm doing this. I just trade by myself. I'm kidding, man. I'm kidding. That's trading by yourself. I did it for 7 years. It's just freaking lonely. Okay, see how we're kind of getting held up here on this 1 minute? I want to see a break, or this is going to drop and retest. I'm going to be very quick at getting out of this trade. So I'll let you know here momentarily. Let's see what a 3 minute looks like. See what a 5. Let's see what this 15 looks like. Let's see what the 30. Yeah, kind of see this fair value gap on a 30. We got 11 minutes to go. It's too long. I'm probably going to be out of the trade before then. Yeah, I'm going to raise my trailing stop up now. Right below this range, guys. This little breakout range is where I got my stop. So I got my stop. This is going to be my stop. Trailing stops right below this. So I'll allow it to come down and wick test, but other than that, if it's gonna dip further than that, I'm just it's a nice win. It's a nice win, and on this 30-minute, we got like what 7 minutes to go. I said 10 minutes. Yeah, price might dance around here a little bit. It already went up, wick tested, kind of deep. It does have high a day liquidity, but remember, we broke structure to the downside on that 30 minutes. So a higher time frame is saying down. That's why I went in real light. Look at the freaking wick test. Did that get me? Oh my gosh, within literally a tick. I got to show that, man. Look at the stop loss. Look at the stop loss. Dang, dude. Like one tick away, bro. That's insane. That is insane. Literally one tick. All right, I think that I'm going to call it. It's kind of dancing around here. I'm going to close out another portion of my trade. I got a 5 on it. You know what I'm saying? I'm going to close 3 out. So I got 2 lots. I'm trading the NASDAQ on my CFD broker, so it's not much. And we're about to hit. I'm glad I took a little bit of profit. Maybe. Go back up. I don't want the run to be over, but yeah, stop loss hit. Good run. Nice win. Let me know in chat. You guys get a win? Type W if you got a win. Let me know. Sam got a W. Let's go. David got a W. Lauren got a W. Majid. Mitchell, Robert, nice. Nice. Good. Keep the W's going, baby. Yeah, that was really a well, in my opinion, well-managed trade, right? Told you all the reasons not to do it. We went through all the reasons why we should do it, all the reasons why we shouldn't do it. And based on the reasons why we should and shouldn't, we decided what our sizing should be. Yes? Did we not do that? That's exactly what we did, right? And so when you're trading, I believe, like my method is to sort of make that checklist, and, you make that checklist. Lucifer is live. Who is this guy? Nice. Okay, so you basically have a checklist, right? You have I call it the 7-step checklist, right? So it's 7 steps to get in the trade. Once you have that and you're like, okay, there's my checklist. It meets all the requirements to at least enter. Now, the most important part is, well, what's my sizing? And am I going to aggressively manage this? Am I down for the day trying to come back from a loss? Because in that case, like I said, if I were down for the day and I got to a place of break even, I would most likely close out my trade. That's what I typically do. And then I'll just wait for another setup, man. Sometimes I'll let it run. If it's just clearly running and it's just going, I'll be like, okay, go ahead, push me into oblivion. Let's go. Let's run it. But it depends, right? I just think it really depends on your trading the money management side of where you're at for the day. That's what I'm trying to say. I'm trying to say that it depends on where you're at for the day. So anyways, all of this now, whenever I'm out of a trade, all of this, like I basically just delete it. And I'm like, however that worked out, like in my life, this is how it works when I trade. I'm like, when I win, and I win, you guys see, I don't even know, like we lose sometimes, but we're way up. We have like, what, 70% win rate in here? Something like that. So like when we win or break even, because break evens, I'm not calling that a win. That's just a neutral trade, right? So like when we win, I just sit back, I go, look, I don't know, maybe, I don't know if I have, how do I teach like intuition? I don't know. How do I teach it, right? How do I teach, I can teach inverted fair value gaps. I can teach market structure break. I can teach liquidity, right? But when I win, I just kind of sit back and go, all right, I thank the trading gods that I win. Like I don't like harp on it. I don't try to define it. I just move on, man. I feel good about it and then I move on. So I really feel like a lot of people harp on their wins and losses way too much. Like way too much. And aggressive Mitch, I don't know, man. Like you're up 23% on your live account your first day. I don't care what anybody says. Like, bro, people can tell you, oh, you're going too hard. Oh, you're going to wreck your account. Whatever, bro. Like they're not you, you know? And so as long as you have your strategy, and I know that you traded, how long did you trade on the demo account with us? Like 3 months? It was something like 3 months, dude. 2 months at least. It was at least a couple months. I know. Let me know in chat. How long did you trade on your demo account? Because I remember or maybe it was like 4 months. I don't know. How long have you been in here? It's like 4 months, something like that. But you traded on your demo account and you were basically popping off big numbers every single day, bro. Like everyone in here can agree. The one person that we all saw like throwing up big numbers every single day without fail was Mitch. Right? Less than 3 months? Okay. Put this back on the board just so I'm going to screenshot it. Yeah, so less than 3 months. Yeah. But you were like popping off in here, man. Every day you were like, oh yeah, I'm up 6%. I'm up 10%. I'm up, you've had days. So, and like, that's what I told you. I said, look, man, whether you're taking more risk or not, just try to trade the same as you've been trading if it's working. And so, you're taking more risk because you can see more drawdown. He says, I used to risk my life and safety for fun. So this is cool for me. It's a good way to look at it. Yeah, risk is one of those things. Like, I feel like there's definitely people who are trying to trade and trying to be profitable traders, but they are so scared of risk. Yeah, and like, man, if my wife was trying to trade, that would be her. She does not like risk. She does not like risk taking at all. I feel like the more entrepreneurial type of mindset you are, maybe the better chance you have. I don't know. But Bo, you're a mathematician, man. And I felt like somebody like Bo has an extreme edge because they're good with numbers. He's not in here today, is he? Is Bo in here? I don't see him. Oh no, yeah, yeah. Hey, what's up, Bo? I know you were in here earlier, but yeah. So, Bo, are you a risk taker? I'm just curious. Bro, Bo is retired. Bo, he's been with us for like a year, and just he started with like the naked hedge strategy, moved into what we're doing now with the one strategy for life, and crushing it, bro. But yeah, Bo, are you a risk taker? Let me know, man. I'm curious. I'm just curious. I don't know if he's here, but because he's like a mathematician, he's had a steady job his whole life, so I'm just wondering if like, if he's a risk taker. Okay. So that was a solid trade, guys. Like, we handled our risk properly. We handled everything proper. We exited at the right time. And you can see as soon as that stop loss, that trailing stop got hit, this little shelf was the only thing we had to kind of work off of. Okay, so now look, on this 1 minute time frame, check it out. I'm going to show you just for fun the range, right? Just for fun, we're going to look at the range. So this is your range. This is your swing high. This is your swing low. I'm going from wick to wick, from tip to tip, right? So you just need to realize when price is pulling back, this is a lower time frame. Obviously, we're going at the 1 minute. It's pulling back into what? Into an order block, into a discount. So if you were going to continue going long, if you thought this trend was going to continue, this would sort of be like your last leg, your sweet spot, so to speak, to kind of buy, you know what I mean? On a 1 minute. But remember, time is fractal and the chart is fractal, price is fractal. So when we zoom out to a range on like what we said, like the 1 hour, what are we in? And you can just see, we're in a discount. Let's go to the 4 hour. What are we in? Now, 4 hours is going to be a very different game, right? But, I mean, you can see from swing to swing. Sorry, let me zoom in a little bit. From swing to swing, what are we in? On a 4 hour, what are we in? We're in a premium. Okay, what is the trend on a 4 hour? What should we be looking for? It's a bullish trend, so we should be looking for a discount to buy. No? So those small little moves, what I'm trying to get at is, look at, we're trading inside of a range. This is our 1 hour range, these blue lines are our 1 hour range. If I go to this, you can see it very clearly, right? Everything inside is a range. So we took a trade inside of a range based on high time frame liquidity. In this case, it's quote session liquidity. Market grabbed, market broke structure on a very low time frame, a 1 minute time frame right here, moved up, yeah, pulled back into what I was considering a decent level for a very small risk trade. Yes, so it's about understanding where you're at on the chart and saying, should I step on the gas here or should I rein it back? And we reined it back. Yes, Federal Reserve announces today what they're going to be doing with the rate cut. Are they going to go 0.5? Are they going to go 0.25? Who knows? Maybe they go 0.75. Who knows? And the market is very indecisive. So I think all that we're going to see right now, and I think it's pretty obvious, we're already seeing it, is a range that is sideways within a range. So we're a range within a range. I think personally, guys, this is just my opinion. I think that one of these levels are going to get broken and tapped today. And here's what I think could happen. I think that you got two options. This is just my opinion, of course, but this is what I think. I think that the previous daily high in the liquidity that's above this range is really sexy. So I think price shooting up, grabbing this liquidity, possibly faking out a little bit higher, potentially get the breakout traders in, take out all the shorts to move down and fill this gap to potentially move down for the day, I believe is a very, very strong possibility. Now, how would I enter this trade if this idea, it's just an idea, I'm not more right than anybody else, man. And we're a family here. So if you guys have other ideas, let me know, because I think that's what makes us stronger, is working together, not trying to say one person's right or wrong or this strategy and that strategy. It's just how can we see these markets a little better? And that's all I'm trying to bring, is that kind of value to you guys. So if you like that, then cool. So yeah, basically we can wait for this high time frame liquidity to get tapped. We can then go down on a small time frame, right? I'm on a 15 minute, but I'm talking like 1 hour. This is high time frame, 4 hour, right? Once this gets tapped, I'm down probably on like a one. Okay, so it gets a little bit complicated on what time frame. Let me explain. If the market shoots up, aggressive Mitch style, aggressive like this, and there's like no break of structure until down here on a 1 minute, look. Now that's just a lot of pullbacks got to happen. Market has to go all the way down here for this to even break structure, yeah? So I give up a lot of the move. Now, usually I'm talking about a higher time frame, like a 5 minute, okay? Like a 15 minute. A lot of times I'm talking about this time frame because look, market comes up, grabs, right? Maybe grabs even higher. Sorry guys, this is the wrong area. Let me go up to this other one. Maybe market grabs on this 15 minute, right? Let me just redo it. Market comes up, boom, news, vertical candle, bam, grabs, right? Well, man, I don't have really like any structure till down here. So then that's when I'm going to like my 1 minute, my 3 minute, because what I need to have happen is some form of structure. So that way, when it breaks, I can see clearly when it breaks, and I can also see if this breaker has a clear fair value gap, something that I can sink my teeth into. And guess what? Sometimes when the market dips quickly and I have a lot of, like, let's say this reverses from this area, it's a lot of volume. Sometimes I'll just get in, put my stop in a pretty safe spot. I even know, like, think turtle soup. I always think market's going to go back up, wick me out, and then go back down, right? So maybe I extend this up a little bit, and that's part of my saving grace, right? But this is at a premium against the 4-hour trend, right? Maybe it's a wick. That's another thing. Is it a wick on a 1 hour? Or is it a closed candle body in 20 seconds? Time is more important than price, man. So it's a little bit more. I don't want to confuse you or make it sound too complicated. It's a lot, but once you get the elements, it's like it's just a checklist. That's it, right? So it's like, let's just say this happens. Sometimes I'll stack my order. Sometimes I'll get in here, half order. And if I only get a half order, same stop loss. So same stop loss, all right? And this is where sizing is very, very important, because if you're going to stack orders, man, you got to be very, very careful, man, because you will blow your account very, very fast. And it doesn't really work for prop firm traders, whatever. So, I'm not a big prop firm guy. I just trade my live account. But anyways, that's neither here nor there. I don't like to be dinged for regular market movement, and I'm profitable in my live account. Why would I, and I can control my money and I get paid when I want. I don't know. There's just too many things with prop. If I was in a different country, maybe I'd think different. But anyways, so sometimes I'll stack my orders, and then I'd have like a medium order in between those, meaning this would be like my position. But basically that kind of like, aggressive breakdown from after grabbing high time frame liquidity up here, let's say it grabs up here, I need some sort of structure to show me that we're breaking. That's all. That's it. It's as simple as that, man. If I can get that, I'm in. But what's going to happen, it does look very obvious to me. I mean, I'm glad we took a trade. I'm glad we got that off. I'm glad that we're, winning for the day. That's a nice W. And it was actually a good push considering where our stop was at. Not bad. And so I think what could happen is a little bit of consolidation here for the rest of the day until the FOMC meeting, right? And then what's going to happen is either taking the highs right up here, forming some structure, okay, boom, and then that's your sign. And I think from there you could go all the way down and fill this gap. So this is scenario number one. Scenario number two is going to be a little different. Scenario number two is that we come down here and we fill this gap, or we grab previous daily low. And the same thing would need to happen, right? I need some form of structure, all right, with a break, and then we go the opposite. So and listen, the distribution here, all right, could be either direction, but the grab is what I'm looking at. The grab, possibly even previous daily low. I'm going to move this lower because this is very probable. And it's sexy. The liquidity here is sexy. So something like this, right? So it's either going to grab the highs and move lower, or grab the lows and move higher. It's so funny because we know price is either going to go up or it's going to go down. But how do you get in? And so that's what I want to help you with, just understanding, what I look for anyways for an entry. Does that make sense? You need Troy to balance Mike out. Great. Afternoon, Mitch. Okay. Oh, right. Yeah, Troy does a good job of balancing me out for sure. Because, it's very simple in like today, I promise you Troy would not be trading right now. There's no way. So my thing is this, guys, like you call it what you want. I trade, we took a win. Did we not? We took a win. All right. So if we took a win, we're again, just thank the trading gods that we got a win maybe. But like for me, I will trade internal structure just with light sizing. If the setup is right, why not? You know what I mean? I'm not like one of those guys that's like, oh, you can't trade because if it has a nice setup, I'm going to take it, man. But light sizing is key because then I never stress. So we're going to probably go sideways here until 1. I don't know what the Fed's going to do today, but there are a lot of speculations. And, to be honest with you, I'm more bearish than bullish. And the reason why I'm more bearish than bullish is because of one question, and that is, does the market like uncertainty? That's the question you need to ask yourself. And if the Fed reduces rates by 0.5 or 0.25, does that solve the uncertainty? Is it like, are we going to get more clarity here? You know what I mean? He's going to give his statement. The statement gets released early anyways, and they're going to announce their Fed rate cut. But is that going to solve the uncertainty? And that's the question. And I just don't think it will. I don't think that traders are going to, I don't think institutions, I don't think traders are going to be like their mind is not going to be at ease. And then what do we have tomorrow for news, right? We have tomorrow's a big day for news because we have the unemployment claims. So this is another thing, like pricing in whether unemployment's going up or not. Like if unemployment is going up, and most likely the Fed has that report early. Like they do. They have it. They have it early, right? So they're going to make their decision based on tomorrow's unemployment claims as well. They're going to factor that in, I'm saying. I'm not saying it's all based on that. I'm saying they're factoring in what the information that we don't have. So yeah, I think that there's more chance that the market dips. Simply because look at the pull, right? We've pulled dramatically to the upside. We don't have a very clear direction of what the Fed is really going to do. And if they reduce rates, we can also take a look at the yield curve. There's a bunch of other stuff we can look at, but everything's pointing to that we're in a recession, like we're going into a recession. So is the market going to like that? The yield curve uninverts. It's an election season. There's all these things. All I can do, man, is look at this and show you where liquidity is at and then wait for the damn reversal. That's it, man. I can't think too much past that. If I think too much past that, I'm just going to outthink, what do they call it? Analysis paralysis, right? I'm just going to have analysis paralysis. So, but I'm glad we got that one trade off. It's been fun. I think I'm going to hop off. And probably when I hop off this, I'll exit this range and everything will move and you'll be like, wow, where's Mike? That's what typically happens, man. That's why I was like hanging on here for a little bit longer. I was like, all right, if this breaks, I can at least, have some fun with you guys, man. Cause that first trade is fun, but it's all internal. It's a very weird spot to trade. We grabbed high time frame session liquidity. We broke structure. We traded into an area of a fair value gap. Just kind of give it a little bit of a shot right there, and it worked out. So I'm happy that happened. So let me get these ideas off the board. Yeah, that's pretty much it, man. I think the market's in this range. It's probably going to range until the afternoon. So, or I'm going to get off, and that's going to be the sign, and then the market's going to go wild. I am going to hop back on. Let me ask you guys, do you guys want me to hop back on? I can, or I won't. I don't know. If I don't get any, what do you guys want me to do? Let's see. So I would hop on at, it's 1, right? Let's say 2, let's see, 2 p.m. Yeah, so 2, that's 1 o'clock. And then 2:30 is the press conference. So from like 1 to like 2:30, probably. Central time. So I'm central, yeah. So from like 1 central to about 2:30 central. If you guys want me to hop on, I can. I don't even want to look at gold, Mitch. I haven't even looked at any other asset, nothing, no other instrument, just the NASDAQ today. That's literally it. That's it. Yeah, okay, fine. You piqued my interest. Fine. Okay, check out the dollar. Guys, look. Look at the dollar, man. Okay, so first thing I look at, before I look at gold, sometimes I go over to the dollar just because this 4 hour is pretty telling. So you had to pop up into this fair value gap. You close inverting the fair value gap. Now it's like an early indication that we're going to break structure to the upside, but it doesn't, probably because of news, right? Uncertainty, but it does fill this gap here and possibly want to move higher. Like if it were if like for me, I think this is going to go higher, just like what I had written out here from when did I do this? Yesterday, day before, something like that. So yeah, I think with the dollar might pop a little bit higher, at least to this shelf. So if that happens, gold is going to come down. Let's see, what did gold do? Let's see. Let's look at gold. I have no idea. Okay, so gold, yeah, you're in an uptrend. It's like what I told you the other day. I don't know how this disappeared from my chart, but okay. But basically this fair value gap here, it also coincides with a shelf that was never retested. So, I mean, like, price is going to retest that shelf. It's going to come down here and retest. And I don't know if it's going to break it or whatnot, but I would absolutely be expecting the retest. So you got shorts, you got a nice, you got sells going. Cool. Let's check out the 1 hour just real quick. Yeah, you're in a downtrend on the 1 hour. You broke structure back here. You broke structure higher, a little bit of a fake out right there because it closes higher, but then instantly closes 2 hours later underneath this range. So you have a change of character down, lower high, lower low, still with a lower high, a higher low with your structural break up here. So you actually have not broken structure on the 1 hour. It's still down. Here's your structural break. Here's your range. That's your 1 hour range. So everything inside is what? Let me know in chat. What is everything inside of that range right there, guys? Maybe I have to make it clearer here. Does it pop? Maybe that pops. Look, there's your low. What created the low? This high. Everything inside is what? That's right, internal structure. So does it mean you can't trade internal structure? No, but your bias should be to the downside. So if I was going to fib this and see, am I in a premium or a discount, I would do something like this. And these would be the areas that I would be looking for, if possible, to get sells, but it's got to be a setup. So I got to go to different time frames. Maybe I go to a 15-minute. Maybe I go to a 5-minute. Look at this. Looky. Playing hooky, man. Look at this, man. Look. So you got your sell. This is your breaker right here. That's your break of structure on a 5. Is there a fair value gap on this 5-minute, inside this 5-minute breaker? Yes or no? We're in a premium, by the way. We're in red. See how we're in red? Okay, let me delete that. So is there a fair value gap? Yes, there is. There's 2. Okay, I'm just going to highlight both of them right here. So do they overlap the breaker? Yes or no? 5-minute fair value gap. Boom. Okay, they do, right? So as soon as price touches the overlapping part, you can have an order set up. Boom. What's your TP? You're going to have structure. This is a 3-candle pullback right there. Is that 3 candles? Yes or no? No. So your TP is going to be down here. Does that give you a 1-to-1 risk reward ratio? Yes, it does. Great. Now from here, what are you risking? Well, you're in a premium on this 5-minute range. Yeah. I mean, I'm sorry. On the, my bad, guys. On the, what did I say? The 1 hour? Was that a 1 hour range? My bad. The 1 hour range. You're in a premium. Okay. So if I'm trading on a 5, that's a pretty low time frame. So if I'm in a premium on a 1 hour and I'm trading on a 5, that's pretty good. I got 2 things kind of lined up. I don't even need to go higher than a 1 hour because I'm only trading on a 5. Does that make sense? I could go to the 4. I already know I'm in a premium on the 4 because, I mean, look at gold, right? I mean, come on. Where's the swing? Way down here, right? So I'm in a premium on a 4. I'm in a premium on a 1. I'm in a premium on a 5. Do you see how this is lining up, right? That's just the way I see the market, man. That's just how I get in. You know what I mean? I'm not saying it's the perfect. That's just how I get in. Now look at this. So we have our TP1 right here, but what does our external structure say? Meaning, let's go to the 1 hour. What structure are we in on the 1 hour? Down, right? So our ultimate structure, our ultimate TP for this trade, if I were to let this ride, is going to be the outer liquidity levels that are very obvious, by the way, like on the 1 hour on a higher time frame. So here's a high time frame liquidity level here. Here's a high time frame here, and that's the break of structure. This is the last line in the sand. So if I enter on a 5 and I'm in downward structure, then what can I monitor the trade? What time frame can I monitor this trade on? Maybe a 1 minute. See how the 1 minute structure has not been broken? Okay, so maybe a 1 minute, maybe a 3. If the 1 minute's messy, maybe a 3, right? So I can turn this into a cheap trade. And by the way, I mean, this was already a 1-to-1 from this entry point. So if price right here, I can already see where I would have been out. Let's check a 5 real quick. Yeah, I wouldn't even have waited for the 5. I'd probably be looking at this on a 1, most likely. Yeah, so this actually tests here, but is that your closure? Let me see. Yeah, so a 5-minute closure, you have to wait. So this would have been the second test on the 1. So this is a second swing right here. This would have been the entry. Price pulls down, makes a lower low, then price inverts this fair value gap. Right here, you can see it really clearly. Right there, that gets inverted, right? Price closes above. So for me, this trade would have been half out. Depends, right? Depends on what my scenario is. But, and I can keep going through this, but, you know, I would either exit that trade right there at that inversion right here. So let me show you right there. So I'd either exit that trade, probably get a nice little 1-to-1. If I was, it depends. What time is it, right? It's 10:30. Okay. At this break, when we break this structure right here, this consolidative structure right here, I'm definitely out. So I would have taken it right there no matter what. So that's kind of like micromanaging these trades, man. That's the only difference I see between profitable traders and not profitable traders. Is do you understand price enough to just micro the crap out of it? Like micromanage your wins, you know? That's it. And then have the confidence to actually exit. You know what's crazy? Like confidence to me, check this out. This is a little bit of a mind F. The confidence to me is being able to exit your trade when you're down, not when you're up. When you're up, it's actually the opposite. Do you know that? Exiting your trade when you're in profit is actually it's a weak sign. If you're exiting your trades in profit and you're not doing it based off of price action, that has nothing to do with confidence. It's the opposite, right? You're scared you're going to lose the money you're making. But confidence comes from, in my opinion, like being able to exit trades when you're in drawdown. Because you're confident with your analysis, you know this is not right for me, I'm out, right? So anyways, that is the trade setup for gold, and that already played out. So very, very interesting because I already called the dollar going up. So that's interesting too. You know, we'll see. What else? Look at this, Bo. I know you like to trade oil. So oil, interesting. I have still my same areas of entry on oil. If you like to trade oil, same areas, just hasn't been tapped yet. So waiting for price to get to me, and then we'll see. But where did my alert go? Oh man, set my alert up. There we go. What else? Yeah. Okay, so now we have SMT. So check it out. So with the NASDAQ, we have SMT. We have the lows being grabbed from the Dow, right? And then we have not grabbed lows. Looks like NASDAQ wants to. So if NASDAQ grabs lows, the Dow grabs lows, but the ES remains strong over here and doesn't grab lows, that's SMT. And all that means is that there's a chance of reversal to the upside. So, but we should expect the ES to push harder because it's the one that didn't grab the lows than the other two. That's how that works, right? But it hasn't closed. We still have some time. These are periods of time. These are cycles. And so this is an hour and a half. And I think we still have like 30 minutes to go or something. Let's see. We still have, let's see, boom. Go from there to there. We still have 30 minutes or so, 30 something minutes. So we'll see what happens there, but there could be a reversal incoming. So that means maybe the NASDAQ pushes hard and grabs lows. I don't know. We'll see. Maybe not. I still think we range right here until news, to be honest with you. And then I do have my liquidity targets down below. I'd much rather take a buy once we fill some of these targets below. Oh, here we go. See, you're glad I didn't jump off a stream just yet. Now price is finally freaking moving. Dang. Nice. Nothing's going to happen, by the way. I'm probably not going to take a trade, so it doesn't really matter. But yeah, man, I'm going to hop out. I'm going to hop off. It's been a nice stream. Appreciate you guys today. Hopefully everyone made some money. Fioravante, sorry, bro. I didn't get to your question. Where is the breaker? Oh, Where is the broker or breaker? Yeah, sorry, I have bad eyes, man. No worries. We'll go over breakers a different time. I'm beat, man. I'm tired. I'll see you guys. I'll be back on at 1, a little bit before 1. So look out for that. And yeah, man. Hope that you guys had a good trading session with me this morning. And post your wins. Oh, we got to do TMT games, don't we? Guys, I keep saying it every day. But tomorrow we're going to just save up your wins, guys. Please save your wins. We're probably going to have a ton, I know, but Troy isn't here, you know, it throws everything off. I don't even remember the site he uses, so I have to do like the random spinning the wheel and all that stuff. But guys, we'll get to it, okay? Appreciate you, and I will see you later this evening. All right. Ciao. For those of you on YouTube, subscribe, man. Don't just lurk. You know what I'm saying? I'll see you guys at 1 o'clock Central. Bye.